Okay, so this is looking at the short-term holder versus long-term holder supply. And so I've actually usually shown this in inverse. So people who are confused, like, oh, I've seen this chart before. Will, why does it look weird? That's why it's the opposite of what it usually looks like. And so the reasoning is because I kind of saw this pattern. I was staring at it and I was like, hold on, like if you draw trend lines, right, we're basically in this kind of descending wedge, which by the way is like a bullish pattern in technical analysis. But the point I'm just trying to get across here is that when we hit the bottom of this trend line, that's usually when we're at the bottom of these macro corrections. So if you look at, between the 2013, 2017 bull run at the bottom of the bear market, we had two taps along the bottom of the line, at the very bottom of the 2018 bear market. And then also during March, we tapped the bottom of the line. And then above the upper trend line, that's been actually a good signal of when we've hit these macro peaks. So if you look at 2013, 2017, and so now, after we just tagged the bottom of that, so it's kind of counterintuitive. When you hit the bottom of the line, that's actually when the market, you're saying that the market is the most bullish, because you have long-term holders that are, although this is at the bottom of the bear market, it's saying that the long-term holders have locked up the largest amount of supply. So like the expected price appreciation is at the highest when it hits the bottom of this trend line, essentially. And so we've hit the bottom of the trend line. So in other words, what that means is that long-term holder supply shock ratio is at an all-time high, because the chart's inverse. And you're actually now starting to see long-term holder supply roll over a little bit, which we've talked about this many times. That's natural bull market behavior, right? We see long-term holders accumulate into weakness in the bear market. They kind of set the floor, lock up a certain portion of supply that kind of initiates the momentum into the next rally. And then as the reflexivity of a full-blown Bitcoin bull market takes off, it kind of becomes a self-feeding thing. And then the long-term holders can then start to, sell their bags to the newer market participants. You're now starting to see the long-term holder supply roll over a little bit. You started to see that like right after we had that all-time high breakout. Since then, it's kind of flat, but it looks like it's kind of topping out, which is once again natural bull market behavior from these long-term holders. And I suspect you'll start to see long-term holder supply decrease, more so, which means that we'll move, as I put in that arrow in that chart, we'll move back towards the upper bound of the descending wedge. So it's counterintuitive. What I'm saying is, as we move higher back towards the upper trend line, it means that long-term holders are selling their bags to short-term holders, which is natural bull market behavior.